CGBC Markets Morning Call, 23rd of October, 2025. I'm Mark Gardner. Headlines overnight, essentially, US and China tensions sort of elevated again. As Trump administration is considering banning Chinese exports made with US software. Look, there's been so many threats and takebacks, etc. I think the market's now just trying to wait until Xi and Trump meet in South Korea later this month, and we are at the 23rd, so it's obviously in the next sort of 8 days. So that will be, that'll be the real. There'll be a few silly things said, I would imagine, until that point. Trump trying to gain leverage leading into that meeting, and as per usual, I dare say China will just stay fairly quiet. Little bit of earnings jitters. We saw Netflix. There's a big impairment for some Brazilian tax thing, and then that sent Netflix down about 10.5%. And then we had Tesla report earnings after the bell, which is why we're a little bit late here this morning. But overall, obviously, Aussie got hit yesterday. The mining sector taking back some of those pretty big gains over the course of the last few weeks. Hang Seng also followed it, as did Euro stocks. The Dow, S&P, Nasdaq, and Russell falling away into the close. We really were. I think the wall of worry sometimes. I mean, the market's ability to climb that wall of worry, particularly in the US, has been absolutely insane this year, and has been something I've never seen in 30 years of being in markets. The ability for it just to, block out the noise. But these things now, we're going into our 23rd odd day of government shutdown. We've had no economic numbers for a while. We've got a Fed meeting coming up, and they're not going to have data. We've got trade tensions between US and China, etc. There was a little bit of geopolitical stuff overnight. Diplomatic efforts have stalled with Russia and Trump. So the summit between Trump and Putin was shelved for now. So they basically haven't changed their stance on the Ukraine. So they sort of cast any doubt of any progress moving forward. So overall, we saw gold continue to, not yesterday's move was quite huge, but down about 5 or 6%, and we saw that the momentum guys obviously taking some profits and etc. But it was down about 1.5% overnight. I believe like the likes of silver and things, which we'll get to later on, actually sort of headed a little bit higher. So Apple was down 1.64, basically because they're abandoning yet another project before it's really begun, the iPhone Air. Because they've surveyed and they've realised that there's absolutely no demand for it, and foldable phones and things they're looking to abandon as well. Anyone who watches the podcast or has seen me do media on Apple and things, I'm quite bearish Apple. I think they're one technology leap in smartphones away from being very irrelevant, which means that they'll lose people within their ecosystem, which is a disaster for all the other parts of their business as well. And that stickiness being in the iTunes and iStore ecosystem will sort of start to disintegrate very quickly. So they are sitting on miles of cash, but this is just yet another. I mean, they try to do a car, they try to do a TV, they've tried to do a bunch of things, and realistically, all they've done is put a new camera and a processor, and a new processor in the iPhone since about 2012. And the reason they put the processor in half the time is to drive high battery usage on old models to get people to trade up, which they copped multi-$100 million fines for about 8 years ago. So Netflix down, Palantir and CRM down. Those guys were, and AMD's been super hot. So these stocks, apart from Netflix, have been super hot in the last few days anyway. So it's probably just giving back a little bit of gains. As you can see, industrials there, particularly down. That's a very cyclical sector. One of our favourites here at MPC, Intuitive Surgical, ISRG, up 14% overnight. And we're, that's coming off, coming off a bit of a low base, realistically. I think there's certainly some really good upside, although it's been quite expensive for about a year. But, and had a bit of a settling period. But I would imagine those with AI advancing and those, more and more hospitals putting those things in, they're doing more and more surgeries. That's going to continue to head higher because the total addressable market for that sector is enormous, and they're only doing really basic surgeries now. The better it gets, that total addressable market grows and grows and grows. So, in terms of earnings, we had AT&T last night. They added more wireless subscribers in the third quarter, but they were down 1.5%. And they bundled plans and heavy promotions around the latest iPhone launch. So there was a reason for it. Hilton, stock gained as the hotel operator, outpaced quarterly earning expectations. It actually slashed its 2025 room revenue forecast, though, but we ended up about 4%. So that was obviously priced in quite a bit. And then Netflix as well. Stock slumped after a reported third quarter operating margin of 28%, which missed expectations. This is related to a spat with Brazilian authorities on tax. And then Apple down 1.8. The tech giant's drastically cutting production orders for its new iPhone Air model. And then it's shifting focus to iPhone 17 variants. And Tesla, the big shows. So look, the company reported adjusted earnings per share around the 50-cent mark. They're expecting 54, which was a miss. Revenue beat. Total deliveries jumped 7% as well, mainly due to the expiring tax concessions on Teslas. So everyone's rushing to get that done before Trump removes those. China was up, but concerningly, Europe was down 20% in a market where essentially European EV sales were up, 30-odd%. So, that is, I guess, of concern. But that we are talking about an area that we're burning, burning and rolling over Teslas because they hated Elon Musk so much. More a reflection of just general unrest there in Europe at the moment, and taking it out on Elon, who can be quite blunt. Free cash flow number was expected about 1.3 billion, came in at nearly 4 billion. That was huge. So, margins were slightly better. As you can see here, so look, 18% margin was up 2 basis points. Operating margin up 5 basis points. So, they're net profitable. But this energy generation and storage services were. Energy storage was up 44% year on year, and it's only obviously revenue from the cars at the moment is 20 billion, but if you start growing at 30 to 40% a year compounded, all of a sudden that revenue line in there is going to come in pretty. It's going to start growing and growing. There's no revenue lines at all in terms of Optimus as well, or the self-driving cars. The earnings call is on right now. I just couldn't wait until to do that, to hear that call. That what everyone's largely expecting that to be the big show, and myself particularly, because there's been a lot of stuff sort of brought out over the past few days or past few weeks about they've ordered $680 million worth of parts. They're in the final stages of the production line for the Optimus robots as well. And they're essentially they're a top of the line, best in class manufacturer, and just EVs is just a thing they've started with, and now they're building the robots that will probably man those manufacturing and production lines moving forward. So one of the key things with the Optimus that I particularly like, and why we're very positive on the stock, is their ability to repurpose an entire production line to pivot a product range. So, if you decide that you come up with a product that's starting to be popular, the downtime of repurposing is not weeks or months, it's literally days. Forget the labor cost savings, etc. And then when one robot learns, they all learn. So you're not having a stop work meeting with a union rep and losing 3 days and and rolling out those those learned lessons across your production lines. So yeah, there'll be more of the sizzle in the earnings calls. So, but it was down around about 2% in the aftermarket, just on that revenue, on those misses and those margin compressions. But look, overall, I don't think anyone who's holding Tesla stocks holding it because they're positive Tesla EVs. They're holding it for very different reasons, and where some disappointment could come is if he's not bullish on this stuff, on Optimus and on the energy and generation and storage side and the self-driving taxis, there's going to be some very, very disappointed Tesla bulls out there, and the stock could get belted. Conversely, everyone's already bought the stock. I don't think it's going to add enormous amounts of upside unless there's a surprise a surprise product announcement. So I dare say that the upside might be limited, because if you've drunk the Kool-Aid, you're already sold. So, but we will see, and we've had quite a decent rally of late, but we'll just see what happens. And I'll cover that tomorrow in the morning call. In terms of earnings, not too much tomorrow or tonight. Honeywell might be interesting. They're a little bit involved in the AI sector. And some of that robotics and automation sector. Some of the healthcare names might be interesting. I dare say HCA Healthcare, they run hospitals and things. Those policy moves haven't really come through yet from Trump in the healthcare sector. So everyone, they're quite under the pump at the moment. But realistically, we've had the two big names, Netflix and Tesla. They're both largely kind of disappointed at this point in time. So it'd be interesting to see, next week we'll start to get, another 3 or 4 of the Mag 7. So credit spread watch, guys. So this is, me rabbiting on about credit spreads and monitoring credit spreads is, it's all great to know and whatever. But like, as I've said in the past, the likes of Michael Burry with 3 years early on this stuff. So I've always sort of said, maintain, with a grain of salt, unless contagion starts, the system will continue to plod on. However, a central bank chief warning is very concerning. And this is a direct quote: worrying echoes of the 2008 financial crash. And then in the last 48 hours, a subprime lender, PrimaLend, has entered bankruptcy after a bond default. So subprime is just that, subprime. It's not ideal. But you're not talking treasuries here. But look, it's just where there's smoke, there's fire. And that after First Brands, what Jamie Dimon said, who's which you need to take with a grain of salt as well, because they're he's generally quite cautious and very risk averse, the same as myself. But a central banker saying that they don't generally have the freedom to say things around this sort of stuff unless they're genuinely concerned. So that worries me a little bit more. But again, it's just be alert, not alarmed. It's a situation that needs to be monitored. But if I'm bringing up more and more of these news stories here, as I'm scraping through, and they tend to, it tends to start extrapolating, and then that's where credit starts to freeze, and then that's where you sort of start to get a bit of an issue. There was no move in the credit spreads, albeit that it's a 24-hour delayed data. It's still around that 1.6 mark for those of you who watch on a regular basis. But I'm keeping an eye on that for everyone as well. So that is not the correct gold and silver for the. So gold was only down 1.5 or thereabouts. I will get you a better. I'll get you a more accurate chart here. So gold was down 0.65. Silver was basically flat, and we had copper actually recover 1%. Uranium's really copping a bit of a hiding at the moment. Whereby and I did warn everyone a few weeks ago that these trades are running super hot, and we need to be really mindful to be trimming on the way up, because once they've gone, or once they've started to pull back, it's sort of too late. So you can't really, you need to be managing your risk before the moves happen rather than after the moves happening. And that's where we were trimming. We were trimming certain gold mining holdings, etc. And yeah, so I've fixed that up there now. Down 0.65, but obviously silver's still down 8% for the week, but gold's really only down 2% for the week. I mean, it's not. I mean, for all of the worry and things, like, I mean, it was healthy for that thing to have, for these things to have a bit of a pullback. Uranium's up. Like, that ETF's been up 160, 170% at certain stages from the absolute lows. So it's healthy for these things to have pullbacks. Bitcoin down 3 and a bit, been fairly quiet in Bitcoin town. But I think the fact that these things just, we'll keep an eye on these precious metals. And if they sort of stabilize around here, I would expect around this 47, 48 mark, and silver would probably be decent buying. Platinum as well. Gold, I'm not as certain. Like I said, I still probably prefer the gold miners, but yeah, it'd be interesting to see what these Tesla webcast call comes out with, and so it might set the tone a little bit. But I think we're probably in for the ASX. We're probably in for a relatively quiet day and some stabilization. And then probably focusing on earnings next week, because we've got no economic data to look at in the US. So yeah, but not. I wouldn't expect much out of the ASX today. And look, we've had a pretty good run. So I think maybe maybe a little bit of a bid tone potentially in those miners again, or a little bit of dip buying, I would say, there. But anyway, everyone, have a great day. And